If it was all at once, it would be catastrophic, as everything in this country is inversely correlated to a spike in interest rates, including the banks and the insurance companies. And when you realize that this is something that, you know, I've been talking about for 4 years and has materialized much faster than I would have ever have dreamed. When I started talking about it, nobody was, and now everybody is. And when I think to myself, could this really happen in a fashion that would be chaotic? I think absolutely it could. Look, it starts off slow, and the players that are in the know don't want to cut off their nose to spite their face. So it starts with little by little by little de-dollarization, de-treasurization, replacing gold or replacing treasuries with gold, doing it slowly, methodically. But when the world catches on that this is a trend in motion that isn't going to stop and will only get faster, that's when things get very interesting.
Imagine waking up to find that half of the gold in the US Treasury is gone. That's exactly what happened in the 1970s, leading President Nixon to shut the gold window and convert the dollar into a completely fiat currency. Fast forward to today, and the situation is even more alarming. Over the last year and a half, the confidence in the US economy has been questioned, with Putin recently highlighting these concerns at a global conference. Andy Schectman, a leading expert, warns that the massive sell-off in US treasuries by primary creditors like China, Japan, and Saudi Arabia signals a dangerous trend. If this trend continues, a sudden spike in interest rates could lead to a catastrophic collapse of banks and insurance companies. Schectman explains that the days of the US dollar's dominance are rapidly coming to an end, with countries around the world moving away from the dollar and trading in local currencies instead. The potential for a government reset in the US economy isn't just speculation, it's a looming reality. As dollars flood back into the US, inflation could skyrocket, leading to an economic meltdown.
At the end of the World War II in 1944, the Allies met at Bretton Woods. The dollar replaced the pound sterling as the world reserve currency. And we told the world at that point that you take our dollars but can always exchange them back at a fixed rate of $35 per ounce of gold. We will, in essence, back the currency by gold, making it as good as gold. And it was that way until, 1971, when several of the European leaders, in particular de Gaulle from France, realized that we were printing more money to fund the guns and butter endeavor in the Vietnam War than we had gold backing it, and called our bluff and sent warships to New York Harbor filled with dollar bills requesting a transformation into gold. And we did that so much so that over the period of about a year and a half, about half of the gold held at the Treasury was bled down. And this is what led Nixon to take the unconventional step at that point of temporarily, which never opened back up, the gold window. And at that point, our currency was completely fiat. That would be Bretton Woods 1. Bretton Woods 2 loosely would be when Kissinger, as you mentioned, 50 years ago last week, struck a deal with the Saudi kingdom that, hey, we're going to protect you, provide you munitions, but for that protection, you will, by extension of OPEC, value oil in dollars, and then take the excess reserves and recycle them into U.S. treasuries. And it has been that way for, as you mentioned, 50 years. Now, if we take that at face value that this deal was not renewed, we then will follow what Zoltan Pozsar says is Bretton Woods 3, where we are right now, a system that would be identified primarily by commodities. And I would add into it transparency. A system that was predicated on opaque debt instruments and promises by a government that is borderline insolvent and viewed, as I told you way back when, in 2022, as being hypocritical. And we are viewed that way by much of the Southern Hemisphere. I think the days of that being accepted as an asset, the debt promises of a country that is viewed as hypocritical, those days are coming rapidly to an end, and we see that by the massive sell-off in treasuries that we've seen over the last year or two by the countries that have been our primary creditors, China and Japan and Saudi, and all of these countries that have been holding our treasuries. Seems to be that things are changing quite a bit, and I think you can really highlight not only, as you mentioned, the weaponization of the dollar in the treasury market, but taking the unconventional, very dangerous step of confiscating, or all right, let's just call it what it is, stealing the Russian assets, whether it be stealing the interest on the accrual, which the European Union is talking about, to fund the Ukraine and the war, or the United States confiscating the $5 billion in assets we're holding to fund munitions to give to the country that that is fighting the country we stole it from. This is a line that, once you cross it, can you come back from it? It's like a broken glass thrown against the wall. Can you put it back together before mom and dad comes home? And I don't know, Michelle, if that's even possible. Yeah, so every country on the planet's had to stockpile dollars for the last 50 years in order to buy oil. The significance of that is extraordinary, almost as extraordinary as taking the reserves, the excess, and putting it into treasuries, which is the reserve status of the dollar, the settlement status of the dollar, where every country needed to own it and stockpile it in order to buy oil, is certainly being challenged by all of these deals that are being done bilaterally, where countries will trade with one another in local currencies. And this is a huge deal. In other words, what is the incentive of countries to hold our dollars, which are being inflated away at a rate of $1 trillion in debt every single 100 days? What used to take 200 years to accumulate $1 trillion, now we're doing it in 100 days. And a government that has chosen weaponization of the treasury and the dollar if we don't align ideologically. So the incentive of these countries who have been forced into holding dollars and stockpiling them, creating a synthetic demand, you could argue is no longer in place. Now, how fast does this unwind is the big question, but yeah, it's very, very, very significant. The reason the dollar was called the petrodollar, the reason that it had such great privilege and the hegemony, if you will, was created because everyone had to own it in order to buy oil, and oil makes the world go round. You take that away, and what is behind the dollar, it becomes truly fiat, backed by nothing whatsoever. But as Putin has recently said in a conference, the confidence of the United States economy, and I have to add to that the confidence of the United States government. And you ask yourself, is that waning? I'll leave that up to people to decide. I'm sure we'll talk about that as this interview goes on. Well, ultimately, it loses value. I mean, the theory really would be that as those dollars, there are way more dollars outside the U.S. than are inside the U.S. because of the stockpiling to buy oil for 50 years. And as those dollars come home and are sold back to the issuer because no one wants to hold them anymore. Now, it hasn't turned out into a full-fledged dumping, which I could see it turning into that at some point, but there still is demand for the dollar. As you mentioned, still does represent 58% of global reserves, and there is dollar-denominated debt that needs to be paid off. But little by little by little, I call it logarithmic decay. Little by little by little by little, it starts to chip away as those dollars are there's no longer a necessity to hold them. And as those dollars start to come home, inflation rates would go higher and higher and higher and higher, and heaven forbid it's dumping. There's something out there called Project Sandman that basically says there's a whole group of 150, 175 countries that have agreed to do just that, to dump dollars in treasuries at a predetermined time. The question is it orderly or is it chaotic? But as those dollars come home, the level of inflation rises as those currency units are added to the currency base here, which would then raise interest rates. And that's the big thing that I've always talked about, is that Powell doesn't want to raise rates, doesn't want to let the 10-year treasury get above 5% because of the over-leveraged system, in particular the banks and the broker or the insurance companies that are massively over-leveraged and undercapitalized. And as rates rise, and supposedly this magic number is at 5% on the 10-year treasury, things start to break. Now, if all of a sudden the world is no longer holding dollars and in fact forsaking and dumping them and throwing them back to the issuer, creating much, much higher inflation than the CPI would probably tell us, the market would demand a higher interest rate to compensate for that loss of purchasing power. You can't have double-digit inflation and single-digit interest rates. Your currency dies. So interest rates would rise to meet that loss in purchasing power, to compensate for that. And when that happens, that's when you start to get into problems where, as rates rise, things that in this country that make people feel wealthy, their stock holdings, their bond holdings, their real estate holdings, and the money held in the bank are all inversely correlated to that moment. And the over-leveraging of the banks in particular is a real big problem here. But if you think about it, if this happened all at once, if it was all at once, it would be catastrophic, as everything in this country is inversely correlated to a spike in interest rates, including the banks and the insurance companies. And when you realize that this is something that, you know, I've been talking about for 4 years and has materialized much faster than I would have ever have dreamed. When I started talking about it, nobody was, and now everybody is. And when I think to myself, could this really happen in a fashion that would be chaotic? I think absolutely it could. Look, it starts off slow, and the players that are in the know don't want to cut off their nose to spite their face. So it starts with little by little by little de-dollarization, de-treasurization, replacing gold or replacing treasuries with gold, doing it slowly, methodically. But when the world catches on that this is a trend in motion that isn't going to stop and will only get faster, that's when things get very interesting. And if we were to see an outright dumping globally, like an Operation Sandman, as Mike Adams talks about, it would be chaotic, because the natural reaction of the dollar creating hyperinflation being dumped across the globe, hitting our shores in a tsunami of inflation, would be a massive spike in interest rates. The dollar would collapse, the stock market would collapse, the bond market would collapse, banking system would collapse, the insurance companies would collapse, everything. This is the Great Reset. Could it happen? I don't know, I hope not, but I think that we will see a progression, a continued progression of de-dollarization, de-treasurization that we have seen accelerate over the last few years. It's not stopping. The question is, how fast does it accelerate? And that's anyone's guess.